Every month, your salary slips away, a chunk taken by taxes. You work harder, you pay more. But billionaires? They make millions and sometimes pay less in taxes than you. Sounds unfair, right? Here is the truth. They are not cheating the system, they understand it. And by the end of this video, you'll understand it too. In the next few minutes, you'll see how billionaires use the law itself, not loopholes, but the rules written for them, to minimize taxes. You'll learn the exact difference between tax evasion, what's illegal, and tax avoidance, what's legal. Plus, the specific tactics that make the ultra-rich almost untouchable. And once you understand this, you'll never see the tax system the same way again. This video is for educational purposes, not tax advice. Chapter 1: Tax Evasion. Let's start with what most people confuse with tax avoidance. Tax evasion. Tax evasion is illegal. It's when someone intentionally conceals money or lies to the government to reduce tax. Underreporting income. Suppose Sarah owns a small bakery in New York. She earns $80,000 in a year but reports only $50,000 on her tax return to pay less tax. She hides the extra $30,000 in cash sales. This is called underreporting income, and it's illegal. If the IRS finds out, she could face heavy fines, have to repay the unpaid taxes with interest, or even face criminal charges. Hiding assets. John is a wealthy investor who owns several properties and a large savings account overseas. When filing his taxes in the US, he doesn't report his foreign bank account or the rental income he earns from it. He's hiding assets to avoid paying taxes on that income. This is illegal, and if the IRS discovers it, John could face big fines, back taxes, and even jail time for tax evasion. False deductions. Maria is a freelance graphic designer who earns $60,000 a year. She files her tax return and claims $12,000 of personal expenses as business deductions, things like family vacation costs and her kids' school supplies, so her taxable income looks much lower. Why this is illegal? Because Maria knowingly claimed personal spending as business expenses, she reduced her tax bill dishonestly. That's false deduction and counts as tax evasion. Possible consequences: owed back taxes plus interest, substantial penalties and fines from the IRS. Audit or investigation: the IRS may compare bank statements, credit card records, and receipts. In serious cases, criminal charges and jail time. Chapter 2: Tax Avoidance. Welcome to the real billionaire game. Tax avoidance. It's not about hiding money, it's about structuring money. Using laws designed by the governments themselves. Controlled foreign corporations, CFCs. Let's say Daniel owns Caltech Incorporated in California. He forms Cayman Tech Limited, a real foreign subsidiary that actually does licensing and sales for customers outside the US. All transactions are at fair market value and fully reported. Numbers. Total group revenue, $10 million US. Caltech Incorporated US keeps $6 million US of revenue after licensing fees. Cayman Tech Limited, foreign, receives $4 million US in licensing revenue. Cayman Tech's local expenses, $500,000 US. Cayman Tech profit, $3,500,000 US. Foreign tax paid by Cayman Tech. Assume a 10% local tax, for this example $350,000 US. If all income were taxed only in the US, no foreign subsidiary. Tax at 21% on 10 million is equal to $2,100,000 USD. With the legal foreign subsidiary and proper reporting. US tax on Caltech's remaining $6 million at 21% equals $1,260,000 US. Cayman Tech pays foreign tax on its profit equals $350,000 US. A combined tax paid equals $1,260,000 plus $350,000 is equal to $1,610,000 USD. Simple takeaway. The total tax without the structure, $2,100,000 US. Total tax with the legal foreign subsidiary example, $1,610,000 US. Daniel saved $490,000 US in taxes legally. Transfer pricing. Example. A US company, New One Incorporated, makes computer chips. It sells these chips to its German branch, Noon GmbH, which builds and sells laptops in Europe. New One Incorporated US makes a chip for $200 and sells it to New One GmbH for $250, a fair market price. The German branch then uses the chip to build a laptop and sells it for $800. After other costs, New One GmbH makes a profit of $150 per laptop. US HQ $500,000 profit, taxed in the US at 21% equals $105,000 tax. German branch $1,500,000 profit, taxed in Germany at 15% equals $225,000 tax. Total tax paid equals $105,000 plus $225,000, which is $330,000. If New One had done all business in the US, it would pay 21% on $2 million profit, which is $420,000 tax. Using dividends and borrowing. Example: Emma owns a successful US company called Bright Tech Inc. Instead of paying herself a big salary, which is taxed as income up to 37%, she pays herself a dividend from company profits, which is taxed at a lower rate, about 15 to 20%. Later, when Bright Tech earns more profit, Emma borrows $200,000 from the company as a business loan instead of withdrawing it as income. Since loans must be repaid, they aren't taxed as income, as long as it's a real loan with interest and repayment terms. If Emma took $200,000 as salary, taxed, 37% equals $74,000 tax. If she takes it as dividends, taxed, 20% equals $40,000 tax. If she borrows $200,000 properly, no tax now, only repays with interest later. That's how billionaires live off massive loans, backed by their wealth, while earning zero taxable income, technically. Chapter 3: Evasion versus Avoidance. Hide or lie about income through false income reports. That's tax evasion, and it's illegal. Legal: use the law intelligently. Offshore companies, dividends. That's tax avoidance, it is legal. So, the next time you hear billionaires avoid taxes, remember, they're not cheating. They're just using the system smarter than the rest of us. You won't be able to copy billionaire strategies overnight, but you can start thinking like one. Step 1. Stop focusing on salary, build income through assets or businesses. Step 2. Learn how your country's tax system rewards investors. Step 3. Always play within the law, but play smart. The game isn't about how much you make, it's about how much you keep. So next time someone says, the rich don't pay taxes, just remember, they don't dodge the rules, they design around them. If you found this eye-opening, hit like, drop smart money in the comments, and don't forget to subscribe. Thank you for watching. Also check out my other video on how debt can make you richer.